Good morning, afternoon, evening, everyone. Today we're going to cover these significant financial developments from over the weekend with a particular focus on the escalating trade tensions and tariff negotiations that are increasingly dominating market sentiment. Over the weekend, a palpable sense of caution has returned to the markets. U.S. stock futures are pointing lower, with the Dow, S&P 500, and Nasdaq all down around 0.5% as investors grow increasingly concerned about escalating trade tensions. This heightened worry comes directly on the heels of President Trump's announcement of plans to impose a significant 30% tariff on all goods from the European Union and Mexico, effective August 1st. This marks a notable increase from previous rates and is accompanied by a clear warning any retaliatory measures will be met with even higher tariffs from the U.S. side. Regarding the negotiation front, there's a delicate balance at play. The European Union has opted to delay its planned retaliatory tariffs, extending the suspension until early August, specifically to allow for further negotiations. While both the U.S. and the EU are signaling a willingness to continue talks, the underlying risk of escalation remains undeniably high. Beyond the EU and Mexico, the U.S. administration is also broadening its tariff strategy. Letters are being sent to dozens of countries outlining new reciprocal tariff rates. Many of these are also set to take effect on August 1st, with rates ranging from a minimum of 10% on most imports to 30% for Chinese goods and even up to 50% for certain countries and products. While global markets initially appeared to shrug off earlier tariff threats, investors are now clearly taking them much more seriously. We've seen stock indices pull back from their recent highs, and significant volatility is expected to persist as that critical August 1st deadline rapidly approaches. Looking ahead to the coming week, it's packed with crucial economic releases that will provide vital insights. We have the Consumer Price Index on Tuesday, the Producer Price Index on Wednesday, and retail sales on Thursday. These reports will be key to understanding how these tariff dynamics are potentially affecting inflation and consumer demand. Additionally, we're kicking off earnings season with major U.S. banks like J.P. Morgan, Citigroup, and Wells Fargo, along with tech leaders like Netflix and TSMC reporting their Q2 results. Analysts will be closely scrutinizing their commentary on the tangible impact of tariffs on profit margins and their future outlooks. To summarize the key tariff announcements, the European Union and Mexico are facing a 30% announced tariff rate, up from 20% and 25% respectively, with talks ongoing and the EU delaying retaliation. Canada has seen a recent escalation to 35% from 25%. China faces a minimum of 30% with no major change. Other partners are seeing rates from 10% to 50% with letters sent and negotiations ongoing. Beyond the direct tariff news, two other factors are adding to market uncertainty. Firstly, the White House continues to exert pressure on Federal Reserve Chair Jerome Powell, leading to speculation about his job security, which further complicates the economic outlook. The Fed, for its part, remains steadfastly focused on economic data and inflation. Secondly, investor sentiment has notably shifted. Many had previously gambled that these tariff threats would be walked back or softened, but the administration's firm stance has now significantly increased the likelihood that these tariffs will indeed be implemented. This poses a considerable risk to corporate earnings and global economic growth. In summary, financial markets are clearly entering a volatile period. The U.S. administration is rapidly escalating tariff threats against its major trading partners, with negotiations ongoing but no clear resolution yet in sight. The market's immediate focus will be on these trade developments, forthcoming inflation data, and the start of earnings season, all of which will be crucial in gauging the true economic impact of these policy moves.